Currently we are on crude oil, right? The 90-minute time frame. Usually the second time frame that I like following for intraday price, right? So how you set up your bias utilizing the 90-minute time frame, right? Initially, what we're doing is we are building everything beginning from the 6 hours, right? So each one of this individual quarter cycles, right? If we can set them out proper like this, these right here behave like a full cycle, right? Okay, so if I'm to explain bullish prices within the New York range, right? How to anticipate initially higher prices like this, right? With the highest precision or highest accuracy, right? With just no fluff and predefined notions or expectations within price, right? So initially, let's do a bar replay from just the beginning of this part like this, right? Then we're gonna go to the 6 hour time frame. So this is where we begin, right? Okay, 6 hour time frame initially is a full section, meaning that each individual candlestick, right, is a full quarter. This was the Q1, Q2, Q3, Q4, right? Then this is Q1, Asia, right here. Q2, London. Q3, New York, AM. Q4, PM, right? Okay, so if we want our settings to be pretty fine for that, right? This are the most crucial ones. The weekly and the daily quarters, right? Initially, that's the ones we're seeing displayed within price, right? So in simple terms, when you want to trade each individual quarter, right? But for in this case, we're talking about the Q3, right? You're marking out the high and low, the open and close of this candle that begins midnight, the 6 hour. So therefore it ends at 6. Then this one begins at 6, ends at 12. Like that. Hopefully you're getting the gist. Okay, identify its high and identify its low, right? So for bullish, right, there's a few things we need. Price to sweep the low, and we need an additional higher time frame quarter range that price is going to sweep, right? We have this higher from right here going straight down to right here. This is a full range. So if I can increase these and make it like this, right? This would simply be Monday from 6 to Tuesday. Okay, this is our range. This is our dealing range, right? It's a full 24-hour range whereby we got how many candles? 1, 2, 3, 4. It's a full quarter range, right? So this is spelling Monday wrong. Monday. Then we can place this at the top like this, right? So for us to have a intra-session bias, right, we need price to sweep either the previous higher time frame quarter high, right, or its quarter low. Then what you'll notice is that it's pretty much to the pip with the London. So what we can do is say London low, right? And then project this as London high, right? Then this, we can change up the color. Let's make it purple. Then we'll say previous day low, right? Then this would be previous day high, right? Okay, let's switch up the colors just a bit. Perfect, perfect, perfect. Right, so initially, what do? Divide this range from this high to the low, like this, right? Premium and discount. In which range are we in? We're within the discount range of the previous day range. This is initially how you want to identify your premium and discount, right? Then what you can even add on is from the equilibrium of the previous day to the daily low, right? You want to see price within an extreme discount, if that makes sense, right? You want to see price within an extreme discount, so therefore you want to see price draw lower, then repel higher, right? So initially it needs to sweep the previous day low and the London low. This is what you look for every single day for the Q3 range, right? Okay, having that in mind, right, let me just bring back these and remove this right there. So we have an inefficiency gap right here that we can focus on. We have a fair value gap right there that we can focus on, but we'll get back to that. So price from the 6-hour time frame, right, we're gonna go into the 90-minute time frame. Okay, if we fix this up like this, this is the previous day low, right? Then this is the London low, right? So initially, what are we looking for? Our first 6-hour range would be accumulation. Gonna make that a darker gray so we can just have a separation from the larger range, right? That's our accumulation, right? This right here would be our manipulation, right? And now here's the thing, our distribution, we want to see that begin within Q3. So therefore, London sell side has to be swept, right? So if we can do it like this, Q1, this is our first quarter because it opens at 6, right? Q1 has swept the London low, right? Okay, then Q2 needs to sweep the Q1 low, right? So we can say this is Q1 low. To place it at the bottom like this, then let's see, it does just right that. So now that we have price, now the price has swept the London low, the previous day low, and the Q1 low. Those are 3 sell sides that you want to see price sweep, right? You want to see where price is going to react here, because beginning of 9 heading into 12 o'clock, right, we are looking for higher prices. Want to see price distribute higher, right? So price needs to be reacting off a PD array within this range, right? But now here's the thing, it needs to be forming within Q3, right? So if we place this here, do you have anything the price can react off? No. Let's do this. If we place it here, do we have anything the price can react off? No. If we place it here, we have price action just right there. Then place it at the high and the low like this. Okay, within this range right here, what will we be looking for? A PD array, right? A 90-minute PD array. PD array that forms specifically on the 90-minute time frame. You want to see price react off it right here. The most obvious one would be this right here. Can even mark out the whole entire range like this. What is this? It's a bullish order block. Then we can say time. Then we can say time-based PDRA, right? Then we can remove time-based PDRA. So we know that this is a Q3 time-based PDRA. So therefore, within Q3 is what? This whole entire range right here. This should be supporting higher prices, right? Okay. Now from the 90-minute time frame, where we going? Going straight to the 5. That's where we look for our displacements and we seek higher prices. All right. Okay. Before we can do that, we need to come to our quarters and enable the micro 90-minute cycle range, which are these ones right there, right? And then we can remove the weekly profiles because for this time frame, we don't need them. Okay. So this is our accumulation, right? Right there. Which is Q1. Just like that. Then the range after it would be our distribution. Right. So this would be our Q2 range. We can say Q2. Okay. Now we're adding in a bit more confluences to what we are looking for. Right. Q2 would be the end and the beginning of Q3, right? From Q3 heading into Q4. This is our kill zone. So therefore, the range from 9, right, to 12 o'clock, this is initially our kill zone. Right there, right? What are we looking for? Displacement, right? Meaning that from the beginning of this whole entire range, we can use any PDRA that formed within this range to seek higher prices. Then let's see. What do we have before the session opens? This. Drag this down a bit like this. We can say inside, right? We have a bullish breaker, right? Okay, so this is a bullish breaker high, right? This would be our bullish breaker low. Now when we want to refine price, it would be this whole entire range right here, just like that, right? Okay, so if we can zoom in to this range, this whole entire range right there, we look for PDRAs that form within this range to support higher prices, right? Okay. Which ones would you say you see? This right here, which stands as a bullish order block. What does that mean? As soon as price draws back into it, would initially be going long, right? Then our drawn liquidity would be the Q1 high, right? The Q1 high, the London high, and if price has not reached that within Q3, then generally would be looking for a PD array that's formed within Q3 to target, right? Okay, let's see. Let's try going. Price taps it, so that's where we go long, right? Place our stop just below price right there, right? But if you want to be more aggressive, you'd initially be placing it just right there, right? Then your drawn liquidity would be the accumulation high, which is the Q1 high, right? Which is a proper risk to reward ratio, if you can see, or this initial high right there. Then let's just see our price books. And also adding into it, every PD array within this range, right, should be utilized to support higher prices. Does it make sense? Okay. Price draws to it within Q3, right? Price draws to it within Q3, as you can see. So price reached your target. Call this a very low resistant run, price run, right? Meaning that price is in a hurry to get there. So usually with around the 9 to 10:30, right? This is the type of price action you want to see, right? On all your asset classes. It can be crude oil, can be gold, can be your futures, NASDAQ, US 30, can even be Forex, right? But more often than not, I'd want to be involved in Forex during London, right? But we'll be going through that section too. So yeah, you know. So also you want to study each individual quarter when you're within it, divide it into microcycles. Let's do this. And let's see. Can't even go to that's fine. Notice how price is reacting through the Q1 high, right there. The Q3 high, right? Therefore, if we were to divide this range into quarters like this, it's not perfect, but it's good enough. We can go to the 1 minute time frame. Then let's see if price is gonna refine it. This would be our ranges. When you have signatures like this within price, right? Also study the fact that price is above this dealing range right there. But let's remove everything and just focus on our current quarters. Price is right there like that, right? Then we can set this up like this. Price is above the Q3 range, right? So we can set it up like this. Q1 has distributed higher like this. Sweeping the Q2 high. Then our microcycle Q2, that's distributed higher too, right? If we make this red, generally within Q2, Q3 and Q4, you generally potentially find price drawing back to a short-term low, which it could be a short-term quarter low, right? So you would initially try capitalizing that on a specific trade, right? Let's see, right? Just draws lower. What is it seeking? Previous quarter lows. Then it can continue resuming doing what it's looking for. Let's see. Q3 reacted, studying where price is reacting right here. This is Q1, right? What do we have here? We have a fair value gap that formed within Q1. Where is it reacting? Q1. If you want to be more clear, more precise, you can go to a higher time frame, then outline the all overall zone or area. Right, so this is where price is reacting from. Then Q1. As we say, these are time-based P arrays. Then it draws higher. Right. Okay. So hopefully this video made sense. Hope you found some enlightenment. And yeah, see you in the next video.